All right. What is up, traders? What's up, tycoons? Super excited for today's video. We did just add a couple stocks to the 50K portfolio challenge. And so I'm going to go over those. These are the two tickers right here, NEP and PBR. Both of these are dividend stocks in my playlist. Okay. So essentially, the reason I added these is because to me, they have some attractive dividends and are at attractive price levels right now. If you take a look, the current yield on NEP, which is Next Era Energy Partners, is about 6%, and PBR is about 59.52%. So, really attractive dividends on those. Again, this is the dividend and wheel option strategy portfolio. Now, I did not sell any options this week. All right. The market's in a very unsure place right now. So I'm not looking to, over leverage myself by trying to trade options and sell options on them at times like these if I'm not uncertain, or if I'm uncertain about where things are going to go in the market. So really I'm just adding some starter positions, and I may cut some of these, or I may add more to these in the future. Really just depends on how I see things developing. Now, if we take a look, both of these stocks were green on the day. All right, we can see that NEP was up about 2.4% and PBR was up about 5.3%. On NEP, I am down on this position overall after adding. I'm down negative 1.47%. And PBR, I'm actually up about 6.5%. All right. When it comes to the percentage of the portfolio, these two combined are about 15% of the portfolio. We can see a portfolio breakdown here and see the current stocks that we have in. Now, keep in mind that this portfolio breakdown and percentage of portfolio is based on the amount of money invested. So, if you take a look at the total book value, it's at 23,500. That's how much is invested in this portfolio. And if you take a look at the total market value, this is what it's currently worth, right? So it's up about 4.39% currently at the moment. But we have more cash than we do have invested right now. And the reason being is I want to find good deals, right? And so these are potentially good deals. Now, remember, this video is not financial advice, okay? I'm not telling you guys to buy or sell any of these stocks, take any positions in them. Trading in stocks, bonds, commodities, crypto, doing anything like that involves a significant risk of loss. So, be sure to do your own diligence. What I'm simply doing is just reviewing and giving you guys an update on some of the things that I'm looking at and looking to add to or possibly cut. I've cut a lot of positions. We took a lot of profits in the last video. I sold a bunch of stocks. All right. In particular, I did have a lot of Gush. And we had the OPEC news announcements. All right. If you look at Gush, this is the leveraged bullish ETF for energy. And that was a really great play for me. Okay. It's been a great hedge. I've been making these portfolio videos and really started this portfolio honestly right before the bear market started. And I had a really big position in energy. Gush was my largest position, and that really kept this portfolio alive during the bear market and actually kept the portfolio green. Now, currently, I still have about 10 shares of Gush, as I had 110. I sold a covered call, and I wanted that covered call to get executed basically. And it did get executed. So I was forced to sell 100 shares. So I've got about 10 left over. I'll probably cut those sometime soon and just add it to something else. But, just haven't really gotten around to it, and I haven't been adding much or cutting much ever since the last video. But, I did add these two stocks this week. And largely in part, as I mentioned, as part of the dividend, really trying to build some good dividend income here. And then also run the wheel strategy, where this is where you sell covered calls and cash secured puts. And that's why there's such a large cash amount in this portfolio, right? Is because you need that cash to be able to sell covered call or cash secured puts, right? If you want to buy 100 shares of a stock, right, and essentially sell a cash secured put, you're going to need the capital to actually purchase those 100 shares, right? So if I wanted to purchase something that is, $10 a share or $20 a share, if I sell a cash secured put, that's going to cost about $2,000, right, to do so. So I'm going to need that capital up front. So I have plenty of capital here to sell some cash secured puts. as I mentioned, I'm just not very certain of the market right now. A lot of things have ran up massively, and I don't want to start selling cash secured puts when things are overbought or potentially overvalued. And then we see a correction, my cash secured puts get executed, and then we see a correction down another 10, 15, 20% from below those price levels. So for right now, I'm comfortable just adding a little bit of cash. I basically spent about $3,000 adding to these, and these are some nice dividend things. So the whole point and the whole reason that this portfolio has really been green throughout the bear market of 2022 and heading into 2023 is because it's been able to generate income from the dividends as well as generate income from the cash secured puts. Now, the two stocks that I bought before this video, right, the latest additions were SWK was the last stock that we added in this portfolio, Stanley Black & Decker. All right, and we can see that Stanley Black & Decker is actually up about 15% right now. So, I've been really patient and really just waiting. I haven't added stocks in a very long time. And, SWK was the last one that I added. And then KMB was the one that I added before that. So KMB, SWK, PBR, and NEP, those are really the only four new stocks that I've purchased in this portfolio. Really over the past like 3 to 6 months. I'm not exactly sure of the timeline, but everything else I was really just, holding. I felt comfortable in the positions in. Some of them were losers. All right. If we take a look, there's plenty that I'm down on, right? If we take a look at Zim, all right, we can look there. I'm down 33% on that one. But I'm actually very comfortable. If you look, the percentage gain and loss, the net gain is $867 down. Now, the way that this spreadsheet is correlated is it's not showing you the income that I've generated from selling cash secured puts, selling covered calls, as well as the dividend payments. If we take a look at the dividend for Zim, it's currently at a 97.02% yield. Now, there are some tax implications involved with that. But at the end of the day, I've been holding Zim for a very long time. And so those dividends have actually been paying me, and I'm actually still green on the position. But when we look at purely based on the book value and the market value based on share price, that is down right here. Another one that I'm down a significant amount on is BNGO. BNGO has been a pretty rough investment for me, but I wanted to have a little bit of exposure to the biotech sector. Biotech is arguably the most risk-on sector out of all of the, basically sectors of the stock market. And obviously, the market has not been very risk on, right? We just got through a terrible bear market, and we are seeing a bullish Q1. Will that spill over to Q2? We're not too certain of that, but I try to stay pretty diversified and have some exposure to tech, to different things. I also have cannabis in here. If you take a look, the big losers, right, in this portfolio, there are smaller amounts. Okay. Now, Zim is an exception. It's about 7% of the portfolio. And again, that's on the percentage invested, right? So that's on the $23,000 invested. It's about 7% of that. But when you take a look at the cannabis ETF, right, I have MJ. That's about 2.9%. If you look at Bingo, BNGO, that's about 3.6%. So, the losers all are pretty much essentially under 5%. All right. PHO, which is pho. I like to call it pho. One of my favorite dishes right there. And this is the water resources ETF. Now, this position is up about 12.69%. And one of the main reasons that I've held on to this position is because it's been so stable, guys. Again, not long-term financial advice, not short-term financial advice, but just in my opinion, water is something that is very slept on as an investment, especially when you look at what some of the top billionaires are doing in the world. They're actually doing two things. They're accumulating tons of land, right? And specifically farmland and agricultural land. And they're also accumulating tons of water, right? And to me, that's really important because, if you do your own research and look up, it could be fear, it could be FUD articles, but there's plenty of articles and research out there saying that there's going to be a global water shortage, of supply, basically, of water within 2025 to 2030. All right. So, one thing that I wanted to do in this portfolio was get a good exposure to water. All right, now, again, you can see that it's about 20% right now, but we have lots of cash. So relative to when I had a much larger amount of cash, this position wasn't as large, as well as with KMB, right? KMB, both of these I essentially have 5,000 and 4,000 invested in those positions have grown. Now, I'm not necessarily looking to trim in those because I like the prices that I got in at, right? And so rather, I'm looking at, selling cash secured puts below the price levels that I got in at to possibly accumulate more and also get paid to accumulate at those cheaper prices, right? The cool thing about selling cash secured puts is if you're comfortable buying a stock at a certain price, all right, let's say a stock is at, $52 and you want to buy it at $50. Well, rather than just placing a limit order at $50, what you can do is you can actually sell a cash secured put at the $50 strike price and you get paid a premium, right? So let's say you get a $1 premium. All right, that $1 premium will then translate into the actual price that you paid per share, right? So let's say you sell that $50 strike price for the cash secured puts and the stock ends up going down to $49 and your contract gets executed. Well, you receive the $1 premium, a $1 credit for purchasing those shares and selling that cash secured put at the $50 strike price. And so it kind of breaks even, right? And so that's the whole purpose of this dividend portfolio, along with the wheel strategy, is really just to make as much passive income as you can on stocks that you want to hold. So I'm targeting a lot of dividend stocks in here, as well as some other things. If we take a look at KMB, KMB does have a decent dividend. It's about 3.25%. All right. If we look at SWK, that's at 3.74%. So you can see annually, SWK is bringing about 160 bucks. KMB is bringing about 236 bucks. So not life-changing money, guys. But overall, this is stuff that does help you out at the end of the day. And these are just some of the latest additions that I've added to this 50K portfolio. As I mentioned before, I did have a really large exposure to energy through Gush. And I did cut some of that Gush and sell a lot of that energy position. And I've started to dibble back into it. All right. Specifically through PBR. I added 100 shares of PBR. And then I also have some more energy exposure through NextEra Energy Partners, which is NEP. Now, this is clean energy. One of the reasons that, I'm interested in clean energy is specifically because of Biden, right? Joe Biden has a lot of stimulus and, a lot of, basically plans out there to, pump money and fund and stimulate companies and, investments into clean energy. They say don't fight the Fed, right? And so one of the things that I'm looking at is really, not fighting the stimulus money, right? Where are the stimulus checks going to? And they seem to be going towards clean energy. So I don't mind putting a little bit of money in there as well. So appreciate you guys watching. Okay, just wanted to give you all a quick update, let you guys know, the newest additions that I've added into here. Now, energy does look pretty shaky right now, honestly. I've got a really good energy video highlighting XLE and USO. If you take a look at the implied volatility and the historic volatility of those, a big move is coming sometime soon. I don't have a crystal ball, so I can't predict and tell you guys whether it's going to go up or whether it's going to go down. But there is some really good chart patterns we have. And again, if you take a look at that implied volatility, it's at historic lows right now. And, when implied volatility is really low, it tends to shoot back up, right? And things tend to get really volatile. Now, volatility can, coincide with upside price movement or downside price movement. So you have to be prepared for that mentally. And so, that's why I have some small starter positions in there. If things go extremely south, I can cut those, take some small losses. And if things go up, then it'll be looking pretty good.